Okay, so what I've titled the talk, I forget what it was in the presentation, but I've got it down as Easy Money in a Tough Market. What I want to emphasize in this talk is that this is a discovery-driven market. The major mining companies need discoveries, and that's where the money's going to be made, but you'd better do your due diligence. You better know what's coming, what needs to be, what the economic parameters are, et cetera, because there's really not many fools left in this sector to buy up your mistakes. Okay, all you need to know, and this is really all, in my view, you need to know about this sector right now. What you can see here is, this shows the number of discoveries of all metal types going back to 1900. You can see the sharp drop-off since about 2005, 2006. Again, that's in all metals. This is a problem for the majors. They need to replace what they're mining, and it's not happening. And this chart, what I'm trying to show here is that this is by decade. This is, well, 2000 to 2016, 18% of the discoveries have actually been converted into mines. You go clear back to the 1950 to 60, basically, and even going that far back, only about 72% of the discoveries are converted to a mine. That's a really important figure to keep in mind. Okay. A couple of weeks ago, Joe and I got this email in our email basket. And what I'm going to do, we're going to start with something as obvious. This is a Nigerian prince of some sort. I'm writing to see, what we're going to do real quick, I'm going to show this. Y'all know, I don't think anyone would fall for this. I mean, spelling, grammar, punctuation. Hi, I am Mr. Chris. Next sentence. Look at the tense and verbiage. I'm writing for a business which I want to do with you all. You will be interested. All right, whatever. I am under monitor by the security agent. That's a problem. But I'll give you half. I'm going to ship across these gold bars, and you can have half of them. And they're going to come across, nobody's going to know what's in them, et cetera, et cetera. My point being is nobody, I think, in this room would fall for this. So the question is, what is the real risk to reward here? I mean, the reward, obviously, is a number of gold bars. The risk is 100%. It's not going to happen. So I want to think the same way with junior mining stocks. All right, this is a true email that went out publicizing this Lone Tree Gold. And basically what it's saying is for $10,000 you can turn it into $1.25 million if you buy this stock under $1. And that's because Gold Corp is going to get $157 worth of in-the-ground gold value when they buy this out. And even if gold's worth yada, 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 you can own it now for $11.75 an ounce. And the story here is Gold Corp's going to pay $157 an ounce, which gives you a 1,790% profit. Here's how that went. And you can probably guess who sold here and who bought here. Okay? So this concept of valuing a company on, dollar per ounce in the ground is real popular. And here I'm bringing a real sell-side analyst report on this company, and they're valuing ounces in the ground to be found. So how much is this worth? And so what they've done is saying our work shows that you get between 5 and 10% of the value of an ounce in the ground when you sell it. And then they've give this little spreadsheet here that shows the potential grade, potential contained ounces, and the implied value as a market cap, which is 34 million. And you throw in the second little trend over here, and that's 17 million. So basically what we're looking at here is an analyst report that suggests that if there's 660,000 ounces at 5 grams, this company should be worth $35 million. Then you pay, plus you've got the exploration upside. Current market cap's about 19 million. So you've got a double looking at this based on this analysis. And this is the project. This area has been drilled in detail, and this is the hole that just got everybody excited, which was 11 meters of 44 grams. Very, very nice hit. But you need to do the due diligence. How does this relate? The project's been hit 5 times previously. There's 111 drill holes into it, in a very tight area. I want you to notice this is about a 200 by 200 meter area. That's where most of the holes are. And this drill hole over here came across, and that's the one that got everybody excited, with 11 meters of 44 grams. There's a few other drill holes that cross through here that don't really connect with what might this be. So that doesn't really connect. And looking through the technical report and following up on this, previous work has shown this rock has been basically just squished, deformed, faulted, and moved around, and the original gold mineralization is just scattered all over. That doesn't make for a good deposit. There's little to no continuity in the known mineralization. In detail, this was a trench they put out, and notice the scale here, 10 meters. This is what it looks like in detail, with the red being where the quartz and presumably the gold would be. So that's what you're looking at when you're drilling underground. That is a really tough concept. It's going to be a really tough mine to put together and mine, because you don't know where anything's going. So your drill spacing is going to have to be extremely close, etc. Well, that's unfortunate. That didn't come through. But basically, what I wanted to say in this little box here is, what you see is probably what you get on this project. Now, there's still an upside, because I mean, the idea here is that this drill hole, they can continue and show some continuity here along this, or somehow piece together continuity here, or drill deeper and find continuity. That's the bet. That's what if you're into this stock, that's what you need to see going forward. And I think that's the most important concept to get across. Is it's great to buy a drill hole that's great, that is flash and moves the stock, but what do you really need to see going forward in order to know if to keep the stock or sell it? And this is the share price right now. Okay, so let's talk about ounces, valuing something ounces in the ground. This is a common type of slide that companies generally put in their presentation if they feel that they've got a lot of ounces in the ground that aren't being properly valued. And you can see it goes from right here, Spanish Mountain Gold, which is being valued at $6 an ounce, all the way to Rupert Resources, which is being valued at $180 an ounce. And my contention is these numbers are interesting, but they're useless. What matters is the profit margin of those ounces. This one will never make money. I don't know this one well enough, but that's my point. That's not the proper way to value a gold project or any project, I think. All right, let's talk about bank analysts. I like this. This is BMO on Goldcorp. What's really interesting to notice here is the red is their target price. And you'll see a really interesting pattern here. As soon as the price goes up, they jack up the price. But as it goes down, they keep it there, finally drop it just at the wrong time, follow it across, and drop it again. So these guys are sort of looking backwards. They're reactive rather than proactive, and the target is always above the share price almost. Probably not good guys to follow. And one more on newsletters and myself. I got off Inca Kola. Anyway, if you follow newsletters, oftentimes it's buy, and finally they get it right. I try not to fall in that category, but you never know. All right. So this is a basic due diligence list, and I can go into each one of these topics is a whole subject in itself. But really, you need competent, honest management. By competent, I mean both technically competent in the region and type of deposit they're looking for, and competent in terms of markets, how to run the market, how to raise money, how to talk to people, that sort of thing. Share structure. Who cares and at what price? Options and warrants. Know what that is. Know what your overhang is. Know who's getting money and when things are going to roll over. The float, how much is out there, and promotion. Unfortunately, this business does require some promotion to get the word out to y'all. The project, this is where I focus, obviously. The context. Is it a reasonable concept that this company is going to, in the right district, the right geology, to find whatever it is they're looking for? And if they are, what is the tons and grades that they're going to need to cover the capex, the mining cost, infrastructure, all those sorts of things? And these are questions you should ask these folks. They should know. They should know the economics behind what they're looking for before they start looking, I think. Metallurgy, recovery, that's always a big one. Is it sulfide? Is it oxide? Is it locked up in arsenopyrite? Is it really fine-grained, etc.? And is success meaningful? This is something I see all too often, in that even if a company is successful in finding what they're looking for, it does not impact the share price significantly. My view in this sector, early stage, is go big or go home. We're looking for something big that Newmont or Rio Tinto is going to buy at a big premium to what we're in at. I don't want to build a small mine. Money, G&A versus in the ground, cost advance to the next hurdle, and again, who cares? Now we're going to look at a few recent examples of stocks that didn't quite work out. And Joe and I looked at each one of these and passed on them. Camino Minerals had a nice drill hole in a copper system in Peru, but there was no size to it. You could see this on the maps and on the photos that they were drilling at breccia that didn't have any size. Arizona Silver, a lot of hype amongst newsletters that they were onto something, a major silver deposit in Arizona. Some nice pictures, but the geology didn't hang together. This was not the right place for this sort of thing. Orex, this is one we actually bought. They made it a silver discovery in Mexico, and things went well. They actually defined a resource. But right about here, it became obvious that the metallurgy was not going to work. And we sold out in the newsletter. So we made money on a failure. That's the advantage of finding the fatal flaw ahead of the crowd. Nunandina. This was all based on visual descriptions and pictures of core on this project in BC. And again, if you look behind the scene, you could see what was going on, what the geology was, and that this would probably not amount to much of anything. It didn't. Finally, one of Marin's favorites, Northern Dynasty. This was heavily pumped and promoted in the amongst newsletters, and the story being they've got the biggest gold resource, undeveloped gold resource, and copper resource, basically North America, maybe the world. But it's a tough deposit. It's marginal. The high grade is at depth, and the environmental, permitting, social issues are huge. First Quantum came in, did a study, and pulled out. So what can go wrong? Know what can go wrong? What can go right? And be ahead of the curve. So I want to talk about a project that I know fairly well. This is a discovery that Evrim Resources has. We own it in the newsletter. We've made good money on it, still own it. They're looking for a high sulfidation gold system in Mexico. Up there is where it's at. Initial trenchings looked really good. We know the type of deposit. We know and this is only surface work so far. They're drilling now. This is only surface work. But we know that it's oxidized, so the metallurgy is good. We know it's top of a hill, so the strip ratio is good. It's open pittable. Access isn't too bad. We've got a sense of what we need to see and what we're looking for here. And some of the early trenching, excellent results. 193 meters at 2 grams, 156 at 9.7, including a 7-meter zone at 163, 174 at 0.6, 158 at 1 gram. You can see the trenching here. So again, it's looking at surface like they're onto something that could be significant. Size-wise, subsequent work, here's the area of trenching. All these red dots are samples that have been taken and show decent gold numbers. So now we've got size. We've got, something size. Geophysics. So here's where the trenching was done. The geophysics, this blue, all suggests we're looking at oxidized silicic volcanics, which if it's mineralized, it should bleach really well. So our costs are way low. All right, so what the project, like CapEx and mining costs, we've got a good handle on because we know what we're looking for. Easy strip, low cost. Metallurgy's good, we think. You know, I mean, you can pan it out of the samples. Is it meaningful? Yes. If they can find 1 million+ ounces at, let's call it a gram, it gets interesting. If they can find 2 million, it gets real interesting. Newmont came and looked at it and invested $7 million in the company. So that's who cares. We've got somebody in line that would like to own this if they're successful. So finally, what does success look like? This is a chart that we use a lot at Exploration Insights. Originally came from Pierre Lassonde. And this is sort of what you need to keep in mind. This is the stage where you're investing in smart people with good concepts at a very low market cap. And this is where management is key. They need to keep the share structure down. They need to keep spending money efficiently, etc. Here, we're starting to get some good results, right? We're getting some soil samples, some geophysics, some interest. Here, maybe we're getting into some real nice drill holes. Up here is right about where Evrim sits. So what we are looking for now with these results is confirmation that we're right. All right, so and here's the Evrim share price chart. Our initial purchase around 10 cents. We added some here with the first trench results. We got all our money back here, and we're sitting here. So personally, and our newsletter is about what Joe and I do with our money. And so personally, I'm at the point where I'm willing to risk not taking profit at $1.30 or whatever it is, given my cost base of 15. Because if it's successful, this really does well. And we've already got our money back, so there's no real risk in terms of losing additional money. All right, summarizing. Mining companies are desperate for a few economic deposits, and there's going to be very, very few found. I think it's really important to keep that in mind. Know their criteria. You need to know what a mining company wants, not what a newsletter writer or some analyst wants, what the mining company wants, because that's our end game. We want them to buy our stock. We want to sell to someone smarter rather than dumber. They'll command a premium too. We're going to see that more and more. Due diligence is critical. There are as I said, there are very few fools left out there to sell. They all went into crypto and pot. So tons and grade, size matters. Metallurgy, what's the metallurgy going to be? Cost to advance. This is critical. The companies need to continually raise money to explore. They have to have a hurdle, not just in terms of what they do at the exploration stage, but how is that going to positively affect the share price? In theory, you want to continue raising money at a higher share price. CapEx and OpEx, again, that's critical. Is this thing sitting in Nevada next to a road, or is it in the top of the Andes in Ecuador? Big difference in CapEx. And the local and social environment, that's, again, key. So many projects might be in good locations, but they're just in the wrong place. So that's, I guess, all I want to cover. Joe and I work together a lot. We're both economic geologists. He's younger and smarter and, I've been told, better looking than me. Our website is explorationinsights.com. There's a lot of free information there. And send us an email if you've got a question. And I guess that's what I want to get across. I'm speaking again at 2:20 today. We've got stock picks. Tomorrow there's a panel with Marin Katusa leading called Scams at 2 o'clock. And I'm going to try not to mention any of his stocks. And then at 3:10, it's a walking tour. I'm going to do that as well. So thanks much. Good luck. And I think your timing is right here.